Warren is probably the most rational person I've ever met. Charlie Munger would be a close rival. And Charlie became a man that Warren depended on heavily. And I think his first experiences in the discarded cigar butt era convinced him that it was not exactly where he wanted to be.
He'd made so much money for so long doing what he'd been taught by Ben Graham, which is to buy these very cheap stocks. And if they were cheap enough, he didn't care it was a lousy company and a lousy management. He knew he was going to make money anyway just because of the cheapness.
Charlie Munger has had a big impact on me in moving me toward looking for wonderful companies at fair prices rather than fair companies at wonderful prices. And that was enormously important because it enabled Berkshire to scale up in a way that would have been impossible to do otherwise. Yep.
What are the key indicators you look for within companies before making an investment?
Well, I look for something that does give them a moat around it. We have a company called See's Candy out on the West Coast. See's Candy is boxed chocolates. If you give a box of See's chocolates to your girlfriend on the first date and she kisses you, we own you. You know, I mean, we can raise the price tomorrow and you'll buy the same box. You're not going to fool around with success. So the key there is the response. You do not want to go home on Valentine's Day and say to your wife or your sweetheart, preferably they're the same person, you don't say, here, honey, I took the low bid. It doesn't work. Price is, to a degree, is immaterial. If you've got an economic castle, people are going to come and want to take that castle away from you. And you better have a strong moat. You better have a knight in the castle that knows what he's doing.
You're not buying an asset. You're buying a name. You're buying a brand. You're buying a real franchise here. And Charlie was more responsible for that than anybody.